Korea was closed today, but the next trading day already has one pressure line. If the dollar-won exchange rate holds above 1,550 Korean won currency per US dollar, the equity setup changes fast. Welcome to Dragon Bullion! The clean read for Korea is not a closing price today. The local cash market was closed on June 3rd, so the next session has to be judged by conditions, not by a holiday chart. The first condition is the dollar-won exchange rate. If the dollar-won exchange rate tags the 1,550 area and then falls back toward the 1,530s or below, Korean equities can absorb a normal pullback. But if the dollar-won exchange rate settles above 15,550 and starts moving toward 15,560, 15,570, or 15,580, the pressure is different. That is no longer just a noisy currency move. It becomes a direct burden on foreign flow, valuation comfort, and large cap risk appetite. This is why the next trading day should not be treated as a simple buy the dip day. The market can still be constructive, but the currency has to stop opening higher. The medium-term KOSPI argument is still earnings. Korea has historically received a lower valuation because many listed companies had large revenue but thin operating margins. The current re-rating story only works if that margin structure is changing. It is not enough to say Korea is cheap. The market needs proof that operating profit is staying higher. That puts Samsung Electronics and SK Hynix at the center of the screen again. If their first quarter level of profitability carries into the second quarter, and if third quarter and fourth quarter semiconductor revenue do not roll over, the KOSPI valuation range can be recalculated higher. But that upside has a condition. If memory pricing, HBM, demand, or AI capex expectations weaken together, the re-rating case becomes much thinner. For US viewers, do not read this as a blind Korea call. Read it as a conditional semiconductor call. Samsung Electronics is more complicated because phones and appliances sit beside the semiconductor division. That makes margin interpretation less clean. SK Hynix is more operating leverage sensitive. When a high fixed cost memory company moves from losses to profits, each additional unit of revenue can have a large effect on operating income. That is why Hynix production scale, HBM demand, and the AI memory cycle are critical. A sharp pullback can be attractive only if those variables stay intact. If the stocks fall because the exchange rate scares investors while semiconductor earnings and AI demand are still solid, that is a candidate pullback. If they fall because the profit cycle itself is peaking, that is not a simple entry. That is a reduced risk signal. Bitcoin and Ethereum still matter for the equity setup. They are not separate decorations on the side of the market. If Bitcoin and Ethereum keep falling, that tells us broad risk liquidity is not healthy. Korean equities can still have selective strength, but it becomes harder to call the move broad risk on. The rule is direct. If AI semiconductor leaders hold up while Bitcoin and Ethereum weaken, the market is selective. That means investors should avoid late full-size chase entries and keep altcoin risk defensive. If Bitcoin and Ethereum stabilize, volume improves, and equities hold leadership, then the market has a better chance of treating currency stress as a temporary pullback. The second macro check is rates. In June, investors have to watch central bank guidance, not just actual rate decisions. If policymakers talk as if rate hikes can return, valuation pressure hits growth assets first. Semiconductors, AI, infrastructure, and crypto can all feel that at the same time. WTI oil is the inflation checkpoint. If WTI crude rises enough to revive inflation anxiety while the $1 exchange rate is already high, the Korea setup becomes more fragile. The market does not need perfect macro conditions. It needs the big supports not to break together. FX, rates, oil, and crypto cannot all point in the wrong direction while investors pretend the dip is harmless. The plan is conditional. First, watch the $1 exchange rate around 1,550 Korean won currency per US dollar. If the exchange rate rejects that line and moves lower, watch foreign flow and trading value in Samsung Electronics and SK Hynix. A controlled pullback in the leaders can still be useful. If the $1 exchange rate holds above 1,550 and semiconductor trading value weakens, do not force the trade. Wait for proof. If Samsung Electronics and SK Hynix fall, but HBM demand, memory pricing, and NVIDIA CapEx expectations remain intact, phased entries make more sense than panic selling. If those earnings signals break, reduce first. The profit cycle is the reason for the re-rating. Without it, the valuation argument loses its anchor. For the next session, keep the checklist tight. Watch the $1 exchange rate first. Watch foreign flow second. Watch Samsung Electronics and SK Hynix trading value third. Then watch Bitcoin and Ethereum. If crypto keeps weakening, do not call the move broad risk on. Watch US rate guidance and WTI crude. If they turn inflationary while the Korean won currency stays under pressure, defense comes before dip buying. Finally, watch whether the semiconductor story is still about earnings and margins, not only about a theme. Here is the bottom line. Korea's market was closed today, but the next trading day setup is already defined. The first line is the $1 exchange rate near 4,550 Korean won currency per US dollar. Below that line, the market can still treat volatility as a manageable pullback. Above that line, risk control becomes more important. The second line is semiconductor earnings. Samsung Electronics and SK Hynix remain the core, but only if memory margins, HBM demand, and AI CapEx keep confirming. The third line is liquidity. Bitcoin, Ethereum rates, and WTI have to be watched together. If FX stabilizes and semiconductor profit signals hold, Korea's leader market can continue. If FX, rates, crypto, and semiconductor earnings weaken together, defense comes first.